first one we decided to go with is one that we both are big fans of. I think we're especially even bigger fans after those last earnings. I think
Absolutely.
I was quite positive on them. And I saw your video. You were quite positive on those earnings from the tone that I got from your video, which is HIMS and HERS. So from where we were last time to where we're at right now, HIMS and HERS, with the latest earnings, Henry, what are your current thoughts on the situation?
HIMS are building something very special, and they're extremely early in what they're doing. And what I mean by that is that there's certainly a lot of work to be done. But as I said last time, we've got a very stellar management team and a very ambitious company that has historically proven that they can move extremely fast. So what we saw last quarter was we really saw them solidifying the transition which is underway. A transition from HIMS, a sort of like an online pharmacy plus, online pharmacy and a way to obtain medication easy without all of the third parties, insurance, going to a physical doctor's office and, physical paper with prescriptions on them. That was HIMS historically. They're now moving into preventative care. And what this really is going to give them, if they can pull it off, and it's a big if because they're still in the early stages, it's just going to give them a huge compounding data advantage. Now that they've got that blood testing facility up and running, and so they're doing that testing at the moment, and they've just expanded. They've launched testosterone already. I don't know if they've launched menopause yet, but if they haven't, it's coming very soon.
Yeah.
And that kind of data has the potential to completely transform the company. And what I like about HIMS is so doing this service of let's actually look at your health. Let's give you a service and an MOT. Unfortunately, the way that most people treat their health, and it's not just a fault of theirs, it's a fault of the system overall, is it's like you buy a new car, which is when you're born and when you're young and when you're fit, but you don't really have your service and your MOT. Yes, you fill it up with petrol, you might give it a clean or do some little things yourself, and that's like the equivalent of exercising, but you don't really have a professional to diagnose what's wrong with you actively. At least most people don't do that in most countries. Even the countries that have nationalized healthcare, they're very strange right now. So you don't have this whole preventative aspect. And that's what HIMS has potential to build as they're obtaining granular data through hormone health. So we're seeing a massive shift. And the reason why I really felt bullish, even though I don't think it's going to show up in the numbers just yet, is the amount of different verticals that they are now starting to deploy, which will generate meaningful revenue in 2026. So they said testosterone will be meaningful. The whole body lab testing, that's already started. So that's the blood testing facility. That will generate meaningful revenue in 2026. They talked about longevity, which is basically now using that granular data to say you have a deficiency in this, deficiency in this. They can test all types of things in your blood to then ultimately correlate with certain health conditions. Menopause will be meaningful revenue in 2026. And what scared me before was that stagnation in core growth, particularly when GLP-1 has been going through a bit of headwind right now. And what we saw was a record quarterly revenue. And what we saw that Yemi, the CFO, said that a lot of that slowdown, at least in customers, which I can infer also means revenue, is from their massive legacy category of sexual health being very stagnant. So that means a lot of those legacy divisions are probably doing quite well. But it's all about a bet. It's all about a bet that HIMS, given that they've already got compounding pharmacies, the blood testing facilities, and they've got the distribution, a massive platform, a big trusted brand, and 2 million active subscribers, can transition themselves towards being a huge preventative healthcare company. So I very much liked it. And I like it as an investment even better because the shares have gone down since we last spoke. So it's a better deal.
Yeah, 100%. I was quite surprised, to be fair. I thought there would be a bit of from the shareholder base, I think a lot of people got in because of the hype and the stock and the growth going up 100+% now, whatever it was a few quarters ago. And then we've had the slowdown, and I thought, there's a few people in here that see that revenue slow down. Still exceptional growth, but slow down from where it was, and I thought they'd kind of jump out a little bit. But I didn't expect them to jump out this much, which was the surprise. But yeah, like you were saying, it was a good quarter because it kind of once again clarified that as they enter these new categories and the business gets more diverse, it's going to grow like a weed. And every time they're entering a couple of these TAMs, these TAM potentials are just absolutely massive for them. And that was clear when they talk about some of the new categories that are coming forward. But yeah, I mean, obviously, they had tough comps with these GLP-1s and they were still growing exceptional rates. Was it 50% revenue growth?
I don't remember.
The subscriber growth, when you take out the transition that they had going on from, was it the ED situation? I think that was still going at like 40% subscribers, which is still that's pretty good going. The surprising thing that and there wasn't much clarity on though is the talk around the Novo partnership. I'm surprised they talked about that they were looking at a partnership again, and then no analysts kind of pushed on, with the drama that happened of it last time when there was those public press releases going and they were slating each other. I'm so surprised that there was no questions about, so how have you gone from a public Jeremy Kyle slanging match going on to the point of view where you're now trying to get a partnership going again?
Sure.
I just, that shocked me, which I think it would be good if they do have the partnership again. But I just don't understand how they got to that point, and then there wasn't really that much detail given around that. But that would be really good. And then the Zava side of the platform looks like they're really pushing towards that international expansion probably in the next 12 months. They were obviously mentioning a lot of Canada. I think they mentioned Latin America quite a significant amount. And then obviously they're in the UK slightly to launch at the moment, but pushing international wise. So we might see more mention of international growth as well coming forward. Which, once again, we talk about, the US being so key for them. But if they're able to, I think Canada would be a really easy market for them to go into. But the other markets now, we even talk about the TAM that opens up when they push into those international markets. And and like I said, I was looking at the share price drop and I'm looking at the valuation that's now starting to get to. And I'm thinking, I think you were the same. I actually bought HIMS and Hers for the first time since I think the April drop. And I thought, this is a good step up in the right direction. And with the share price drop, I think it's a bit unjustified at the moment.
Well, I wouldn't complain if I could buy some more at this price, It's excellent. Yeah, you touched on a lot of good points there. Number one, let's remember that before this news came out that Novo was suing HIMS, I think HIMS share price was about $60 to $65 and crashed about 30 to 35% on that day. So obviously the market priced that in. And now you're right that obviously clearly because they're trying to work together, that lawsuit, nothing's going to come of it. And also the fact that they are working together again, or at least trying to build a partnership. What does that say about Novo or a massive pharma company starting to realize the potential of a platform like HIMS? You know what I mean? I'd be very reluctant if it was a company where, we nearly went into a suing match and now we're actually working together in a partnership. So that's very, very positive for HIMS. The international expansion, I think, could add a lot of revenue in 2026. So this is why I'm confident is like, I love it. I love the business conceptually. I think they're executing very well, but I also start to see those tangibles show up in the numbers. If we take international expansion, for example, Yemi said potentially 50 million of incremental revenue in the second half of FY25. So that would be, 100 million annual. They're about to do 2.4. So international is already going to make up 4% of revenue, but they only bought Zava in the spring. So, they're getting their components together extremely fast. That's what I love about HIMS. They're so organized in building this huge platform. And the new lines of business that they're moving into have huge potential. Absolutely huge potential. You know what I'll show you real quick. These are vitamins. Now you may think I'm a bit meticulous, and my girlfriend puts these together for me. And she's done a lot of research on exactly what I need. So these have all got different vitamins in for morning and evening. And this is the kind of thing that HIMS could really expand in, customized vitamins. Some women and men, but to a more extent women, have massive iron deficiencies. A lot of people don't know because they don't get blood tested regularly. Imagine the type of flywheel HIMS creates when it obtains that data, XYZ, you're deficient in this, that, and the other, and you can make custom vitamins.
Yeah. It just shows you the potential that they have to expanding. That's it. It's just you're just scratching the surface. I think people always forget like the amount of medical needs and expansion they currently have. It's scary. But I'm looking there and thinking that if they achieve this, I think they once again mentioned the long-term guide, so it looks like they're still very sure that they can hit that long-term guide. And if they are going to get to 2030 and they're going to do 6.5 billion in revenue and 1.3 billion in adjusted EBITDA by 2030, looking at the market cap right now, and it's about an 8 billion market cap. I mean, that's looks good value there if they hit those numbers.
I completely agree. And the barometer that I mentioned last time, I mentioned in my YouTube video, was, let's call it 8 times sales. So that's 6.5 billion in revenue from where they are now. Even that alone is about a 23% CAGR. So that's the compounding rate from their revenue. If you take FY25's midpoint, FY30 of 6.5 billion, that will compound at about 23, maybe it's 24% revenue growth. However, I think at the moment with HIMS, there's also improvement for massive margin expansion. Because can this business get to 20% free cash flow margin? Probably. A 20% free cash flow margin, 8 times sales, 40 times free cash flow, 8 times sales and 6.5 billion, 6.5 times 8, 52 billion market cap, is just one idea of where it could potentially be with that growth plus the margin expansion. So extremely exciting. And I remember when Yemi mentioned that target, it was actually in response to an analyst question. So I think they mentioned it in prepared remarks, but they mentioned it in the analyst question. And just the way he said, our conviction remains high in our ability to meet or exceed. That is the exact kind of positive reiteration you want from a management team that's going after the big fish. They're not scared to be confident. They're not scared to work hard and put their chips down on the table. That's the kind of attitude I want to see from a management team.
Yeah, and a good point there as well about the scale and the profitability. I always forget, like, these guys and the gross margins they have. Was it 80% gross margins, or did it drop into 70 gross margins? Whatever it is.
Yeah, mid-70s.
Yeah, I mean, that's like SaaS type gross margins, and you forget like the level of profitability and gross margins they have, not reflected in a premium at all on that valuation. Because if this was a SaaS company with those gross margins, you're saying there 8 times sales, it would be a little bit higher than that if that was the case. And that just shows like you say, the potential they have to scale up that profitability.
And that's another one of their targets, long-term gross margin targets, mid-70s. So they've also put their chips down on the table that they can sustain that. And I think as they obtain more data advantage, which they will, with this new level of granularity from blood testing, etc., they will be able to sustain that because they'll be able to offer so much value to customers. Like, it'll be 100 times the value for the same price as the legacy healthcare system could offer.
Yeah, 100%. It sounds like we're both very much very keen at these sort of valuations.
Absolutely. I did mention on my last podcast that I'd reduced my position in HIMS massively, but I ended up buying almost all of it back at about $42 per share after the earnings.
That earnings call must have really got you going then.
It did. HIMS Club again.